think there's a view that traditional automotive companies are going to be players in this. I totally disagree. I think it's going to be Tesla, Rivian. I think it's going to be companies like potentially Apple, Google. And I think if you look at the top 10 car manufacturers today, I bet 3 of the top 10 are going to be trivia questions in the next decade. I do not own a Tesla. I don't think I drink the Kool-Aid. I try to approach this objectively. And I think that this is going to be one of the most wild rides over the next 1 year, 2 years. But I think that this company has an opportunity to be a much bigger company, because I think what they have done around manufacturing is something that is underappreciated. And I think other automotive companies are just now starting to realize how difficult it is to build these vehicles and to build them at a point where they're profitable.
In this video, stock analyst Gene Munster on the inevitable bankruptcy of legacy automotive manufacturers, Tesla's unassailable lead, the inevitable transition to electric vehicles, and why Tesla is just getting started. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So check out the links in the pinned comment below, and thanks for your support.
I'm not putting a flag in the ground saying that Apple's going to do a car. I learned a lesson hard way in terms of predicting Apple's products. However, I think that they desperately want to do this because of that $2.5 trillion addressable market. And if I can just put that into further context related to Apple, if you're Tim Cook, what keeps you up at night is probably China and growth. Back to that adage, you got to grow to survive. And ultimately, you need massive addressable markets to do that. And if you assume that Apple gets 15% of the electric and autonomous car market, that would double their revenue. That's basically $400 billion in revenue. I mean, this could be twice the size as the iPhone.
Let's take a quick moment to let this point sink in. Gene Munster says that if Apple, and that is a big if Apple enter the electric vehicle and autonomy markets and capture just a 15% slice, the company would effectively double their revenue. Now, in case you're unaware, the world's largest companies today by market cap, Microsoft about $2 trillion, Apple almost $2.5 trillion today, without any EVs or any autonomy. As Munster points out, a 15% slice of this opportunity would be as big or bigger than the entire iPhone market is today. And truth be told, I don't really give a flying fuck about Apple, EVs and autonomy. Yeah, maybe they'll do some stuff in software. They're never catching Tesla, even if they do enter this space. I want to flip this on its head a little bit and say, well, what if there's a company out there already today poised to capture at least 15%, maybe even 20, 25% of these opportunities? If such a company were to exist, I definitely don't know of any. I might suggest that maybe over the longer term, their market cap could grow well in excess of where Apple at around $2.5 trillion is today.
I think there still is a big misunderstanding, and that's why EV and autonomy is consensus, but still has not played out. I think there's a view that traditional automotive companies are going to be players in this. I totally disagree. I think it's going to be Tesla, Rivian. I think it's going to be companies like potentially Apple, Google. And I think if you look at the top 10 car manufacturers today, I bet 3 of the top 10 are going to be trivia questions in the next decade. I think that they will be fractions.
Oh, shit. What a savage. Now, first of all, I completely agree with Munster's point here. Legacy automotive manufacturers will not be competing in the electric autonomous future. They're all toast. I mean, yeah, maybe 1 or 2 exceptions, but for the most part, they're all going bankrupt. Writing's been on the wall for years. I've been repeating this since day 1 on the channel. Just a matter of time until this plays out. Worst case, completely bankrupt. Best case, limping forward toward the end of this decade, a fraction of their former selves. Companies who previously were producing around 10 million vehicles per year, maybe if they're lucky, around 1 million, maybe 500,000, maybe 1.5 million. The point is, Munster's right. These companies are destined to become trivia questions. Later this decade, we might hear questions along the lines of, which company, formerly one of the world's largest automotive manufacturers, went bankrupt in 2028? Which company who previously produced over 9 million vehicles in a single year is now currently producing 250,000 and on the verge of bankruptcy, being acquired or merging? Which former automotive CEO stole Tesla's valor, colluded with the corrupt president of the United States, led, and it mattered, and by led we mean led her or his company to bankruptcy? You did it, Mary. I mean, I just spoiled the trivia question, didn't I?
We met with one of the top 5 a year ago. And we asked them about how they were doing relative to electrification and autonomy. And there was about 15 engineers in the room, and it was silent because they don't have any electric cars in the marketplace, even today. And the commentary that I just said came from the response, which is, just because we've been around for 100 years doesn't mean we're going to be around for 100 years.
Not sure if you caught Munster's smirk there, but this is a telling insight. Spoke to one of the world's top 5 automotive manufacturers, had a bunch of engineers in the room who all in their heart of hearts deep down realized the company's f***ed. They have no EVs on the market and are currently boarding the lifeboats to get the f*** off the Titanic. Curiously, embarrassingly, or both, the majority of Wall Street stock analysts seem to be unaware of this very obvious fact. Even a top 5 automotive manufacturer themselves admitting, hey, just because we've been around for a century doesn't mean we're going to survive any longer. Yet just a few days ago on this very channel, I was roasting a few clowns on Wall Street who are recommending investors buy government motor stock, expecting it to double. Same for Ford stock. And don't get me wrong, these stock picks over the short term could be really great picks. But that doesn't change the fact that all of these legacy automotive manufacturers are going full speed toward a cliff, and they don't have time to even touch their brake, let alone stop. By the time they realize they've gone off the edge of a cliff and are in free fall, they're f***ed. Yet ask most Wall Street stock analysts who cover the automotive industry what's going to happen to the companies they're currently covering. Ford, General Motors, Toyota, Hyundai, Kia, and so on. Don't worry, we've seen their plans. They've got 69 new electric vehicle models in the pipeline. The competition is coming. As soon as they release those, they're going to eat Tesla's market share. It's over for Tesla. Don't you worry about that, because EVs are just the same as ICE vehicles.
And when I hear that, I think EV, electrification, autonomy, and potentially with Tesla. And I hope Apple does get into automotive, because it would be a huge re-rate for Apple's valuation.
Now, what to make of the kind of case out there that there's for now anyway, serious constraints to that long-term conversion of most vehicles or all vehicles to electric, whether it's the materials or even the manufacturing base and all the rest of it. I mean, is it just a matter of how quickly, or are those things really impediments that are going to be with us for a while?
So there's the deployment side, which is exactly right. There are major impediments: charging infrastructure, battery manufacturing, the car manufacturing, traditional car companies reworking their manufacturing process, their labor. All of that is something that is going to take a lot of time. Today, it's still only 4%, despite all of the hype, despite Tesla's massive market cap, it's still only 4% of cars today. So there's that piece. Those are all strong headwinds. But my experience has been when there's an undeniable truth, and I think an undeniable truth is electrification of everything. I think cars are an obvious example, just given there's a lot of investment going around it, given the large addressable market. But just think how many products that you have around you that you put fuel into, whether it's your furnace at home, whether it's your lawnmower, your car, it is your gas grill. They are everywhere. And ultimately, I think that electrification is just simply a better way to do it. And so to answer your question about that, all of those headwinds around infrastructure, investors know that those headwinds are there, but they also can sleep well at night knowing that eventually it's going to go from 4% to 100%. That's a function of time.
Munster has absolutely nailed this, and I love the way he summed things up. This is just a function of time now. Stunningly, there are still some people out there today who think that ICE vehicles are going to be around for the long haul. These people are either suffering from a lack of information, brain damage, or both. And it's not just vehicles, although this is a huge opportunity. But as Munster points out, everything's going electric. If only there were any companies out there today who had a clear and unassailable lead in terms of electric vehicles, I'd love to buy their stock. In addition, wouldn't it be amazing if there were some companies that also had some expertise in putting together battery storage, maybe even some sustainable energy generation? So maybe, a whole closed loop thing. They've got transportation, sustainable energy generation, storage, and supply. Such a company would be going after a multi-trillion dollar opportunity. Unfortunately, there are no companies that fit this description. Otherwise, I would probably buy their stock. Does anyone know of any? Let me know in the comments below.
And so there was a learning that I had, a small company. I'm gonna throw it out there. Maybe some of your viewers may have heard of this company. This is back in the late 90s, a company called Sonic Solutions. They missed for 32 consecutive quarters. Small company. I mean, almost like unimaginable, like 5 straight years, they missed their numbers. And yet the stock didn't go down because they wanted to get into, they believed in DVDs. And the DVDs are going to replace VHSs. So I appreciate you humoring me with this example. But the takeaway that I saw is that every time they missed, I thought this stock is going to zero. But they had some patents, they had some technology around authoring and creating DVDs, whether it Blu-ray, or I forget what the other standard was. But that to me was a learning of investors' willingness to kind of power through the near term. Not that they don't care about the near term, but ultimately, I think that these undeniable truths have a way of rewarding investors.
Interesting. So we heard earlier, Munster adamant EVs will be 100% of all new vehicles in the future. Agree, and much sooner than just about anyone is expecting, in my opinion. And that the global economy will be transitioning to 100% electric. And then Munster remarks that these kind of inevitable truths, the transition to EVs and the economy going electric, have a way of rewarding investors. For some reason, I think this might have something to do with Tesla, but I just can't quite figure it out, so maybe not.
Let's apply that to the obvious one, which would be Tesla. For as much as they've made progress, real world progress on production, we got the numbers, over the weekend, tiny perhaps shortfall versus expectations, but still pretty much on plan. And yet the stock is traded, as you know, from 1.2 trillion down to 600-700 billion. Still big numbers, no matter how you slice it relative to the current economic size of the business. So this opportunity, it's mostly, you think, going to go to the newer manufacturers. What's already in the valuation? What's yet to get into it?
So I do not own a Tesla. I don't think I drink the Kool-Aid. I try to approach this objectively. And I think that this is going to be one of the most wild rides over the next 1 year, 2 years.
On this point, I absolutely agree. I expect in the next couple of years, Tesla stock will continue to remain volatile as f***. I could be wrong, but I hope I'm not, because the more volatile, the more buying opportunities, and I'll be taking advantage of every single one of them. I mean, as I record this, Tesla stock is about half price versus where it was less than 1 year ago. And why is it that Tesla stock is so extremely volatile? There's just no consensus opinion or understanding about this company. In my opinion, it'd be hard pressed to find an analyst on Wall Street who truly grasps the opportunity. Some are getting close. There's many on Wall Street now with price targets in excess of $1,200+ per share for Tesla stock, which honestly doesn't take much courage considering less than 12 months ago Tesla stock was over that level. But at the same time, there's still analysts, and I'm using the term extremely loosely there because they're obviously morons, not analysts, with price targets around the $200 or $300 range for Tesla stock, and in some more generous cases even as high as $450 per share. And I genuinely believe that they actually believe that their price target makes sense. Clearly they're off their rocker. The point is they're trying their best. They're trying to understand the opportunity and they just don't get it. And this is why there's such a huge divergence in opinions and thoughts around the future of Tesla and the company's valuation. Ask one analyst on Wall Street, massively overvalued. You ask somebody else, bargain of the century. Until this gap closes, until opinions start to align a little bit more closely on where Tesla's headed, what the company's worth, the opportunity, their leadership, and so on, I expect Tesla stock to remain extremely volatile. And like I said, still buying with every spare cent, so bring it on.
But I think that this company has an opportunity to be a much bigger company, because I think what they have done around manufacturing is something that is underappreciated. And I think other automotive companies are just now starting to realize how difficult it is to build these vehicles and to build them at a point where they're profitable.
Prototypes are easy. Production is hard. I kind of feel like they should have already known this. Maybe I'm being unfair. I just kind of feel like, writing was on the wall. It's kind of obvious. But Munster's right. Legacy automotive manufacturers, if they're lucky, are only now just starting to find out not only how hard it is to make electric vehicles, just to make them, but to do so profitably. Spoiler alert, outside of China, basically no one besides Tesla is making any profit selling electric vehicles today. Really. Maybe in the future, if they don't go bankrupt and they can get to big enough scales and have compelling enough products consumers actually want to buy them, good luck with that. Then they may actually be able to start making these things profitably and avoid going bankrupt. There's a lot of ifs and maybes in that equation. But again, please don't tell any of the dum-dums on Wall Street who assume that if a company has a few computer renderings and announces they're going to have 22,000 different new models of electric vehicle by tomorrow, then they're automatically going to beat Tesla.
Let me just quickly take a step back and talk about what happened with the June delivery numbers. They were disappointing. They slightly missed expectations. It was 28% delivery growth. If you would adjust for Shanghai, it would have been 42%. So if you assume that Shanghai was open for the quarter, it would have been 42% growth. That is a slowdown from 68% growth in the March quarter. So those who are more skeptical about Tesla can point to this big deceleration, 68 basically to 42% growth. That is a negative. And I think that that is symptomatic of higher interest rates. I think it is symptomatic of consumers starting to get nervous about some bigger purchases. And I think there's a little bit of a manufacturing piece onto it too. But when you put all of this together, I think that this, what is most important to me is how are other car companies doing? We've talked about competition relative to Tesla for years, and I still don't think it has presented itself.
Munster makes another great point here. The competition, which allegedly has been coming since around 2012 when Tesla released the Model S, starts winning every award ever. Then we start seeing these articles, and some of them on Seeking Alfalfa from some supposed investing geniuses, telling everybody that the competition is coming. It's been a decade. 10 years. The competition is coming. The competition is coming. The competition is coming. Prematurely, all over itself, and embarrassingly fast. Not for Tesla. A decade later, it's yet to arrive. But of course, the competition is coming. It's definitely going to arrive this year. Definitely. This is the year. This one. This is the year. It's coming. Right? Isn't it?
Yes, Audi's done a great job, especially in Europe. But if you look at General Motors, their EV sales for the June quarter were down 34% year over year. They sold 7,000 electric vehicles.
Well, in the words of the corrupt president of the United States, repeat phrase, then leave the stage. Well, sorry. Oh, you did it, Mary, you led, and it matters.
That compares to whatever it was, 256,000 deliveries for Tesla. I mean, this is, there is a big gap. And of course, my pattern recognition kicks into gear, and I think about what happened with BlackBerry, and think about Nokia. They had an incumbent. They had some great mobile communication devices, but they didn't believe in touchscreen. And by the time they got around to believing in touchscreen, they couldn't get it to a point where it was cost effective enough for consumers to want it. And that's ultimately the catch-22 that I think is going to be the, end of traditional auto as we know it.
Once again, another great point from Munster, and if we read between the lines here, spoiler alert, they're all going bankrupt. They didn't realize EVs were the future, and by the time they figure this out, it's too late to catch up. When I say Tesla's lead is unassailable, I literally mean unassailable, as in you cannot catch up now, it's too late. I'll never get over the level of incompetence, stupidity, idiocy, and blindness of legacy automotive manufacturers. The writing's been on the wall. The cost of lithium-ion batteries are declining predictably over time. Even a literal moron, if given these numbers, a little bit of time to think, can figure out, oh, you mean that the cost of the most expensive thing in these vehicles that today makes them less affordable than ICE vehicles is going to become cheaper and cheaper over time predictably, meaning that we can actually see approximately what point in the future that an electric vehicle will be cheaper to purchase than a comparable ICE vehicle. And we can also see what point in the future it'll be 10% cheaper and 20% cheaper. You're telling me today we can see what the future looks like, and the future looks like ICE vehicles are going to be uneconomical, and therefore consumers will literally need to be brain dead to be buying them in the future. You're telling me that we can know that today, and we could have known that 15 years ago, and yet we haven't done anything about it. Is that what you're telling me? Yes, that's what I'm telling you.
They're not going to be able to scale EV production at a place that is price competitive with Tesla.
So, ladies and gentlemen, if you're paying attention as we listen to comments from Munster here, pretty clear, let's read between the lines here. If, as Munster suggests, and I agree, legacy automotive manufacturers will not be able to scale EV production up to a point where they're cost competitive with Tesla, there's only two ways this plays out. One, maybe if they're lucky, they can sell vehicles with zero profit margin, just break even for the next 5, 10, 15 or so years, get absolutely nowhere, or they go bankrupt because they can't make any money on these vehicles. So, long story short, they're all fucked. I think that's the main theme of today's video. Legacy automotive manufacturers are fucked. All of them are fucked. Not just a little bit fucked. I mean, absolutely fucked.
And I think, Tesla is going to be, the stock could be down 30% next week. I have no idea. But I think when you go back to that TAM, just to quickly finish the thought, you go back to that TAM, $2.5 trillion TAM, Tesla's going to do $85 billion this year. If you assume that they can get to 20% share, you're talking about an $800 billion automotive business. It can be a very big business.
Yeah, we're going to have to build a lot more factories. We know that. The market knows that. We'll see if they can pace it correctly.
Well, pacing it correctly simply means scaling production capacity as fast as possible. The real constraint at this point in time is materials and battery cells. If the laws of physics weren't relevant, Tesla could just click their fingers and instantly have production capacity for 20 plus million electric vehicles per year. that would be the move because they'd sell every single one of those vehicles. Before any Einsteins attempt to argue this point in the comments and point to current EV sales globally, think a little bit. Economies of scale, costs coming down, prices in the future for those same compelling electric vehicles will be much lower than they are today, meaning more people can afford them. Linear decrease in price, exponential increase in demand. So Tesla is currently constrained, not by demand for electric vehicles, but by how fast they can produce them. Tesla is literally scaling up production as fast as they possibly can, given the current constraints. And at the exact same time, the geniuses leading companies like Toyota and General Motors still think that by the end of this decade, consumers will still be buying ICE vehicles from them. These companies clearly aren't scaling their EV production as fast as they possibly can. The fact that these companies still have plans, public plans, to be making ICE vehicles beyond 2030 just goes to show how completely and utterly fucked they really are. Not only that, but how blind they are to this inevitable transition. In Munster's words, an inevitable truth. EVs will be 100% of the new vehicle market in the future. This is just a factor of time. In summary, as we already know, legacy automotive manufacturers are absolutely Tesla has won the decade, the lead is unassailable, and Apple would love to get a slice of the EV and autonomy market, but they're struggling. We've known about the potential Apple electric vehicle now for about a decade, yet we've seen literally nothing from the company, seeming to suggest they're struggling a little bit. And given the fact that legacy automotive manufacturers will be dropping like flies this decade, most new electric vehicle startups will struggle and ultimately end up bankrupt. Sorry to rain on your parade, anybody who's pumped up about these EV startups. I mean, I hope they succeed, but odds are 95% of these companies will be bankrupt before the decade ends too. If what I'm saying is true, and maybe I'm wrong, but if I'm not, it seems at this point in time, there's one winner. And when I say one winner, I mean one winner. No one else is even on the podium. Second and third place, so distant that they're not even worth mentioning. And if that's the case, in just a few words, Tesla is just getting started. So I hope you guys and girls have enjoyed this video. I also hope that none of you are currently working at a legacy automotive manufacturer expecting to have a job in 5 years. If you are, I'd probably start working on plan B, C, D, E, F, and G. And lastly, don't forget you can support the channel and access a ton of exclusive content by joining Patreon with the card in the corner or the link at the pinned comment. 110 exclusive Q&A videos, dozens of other exclusive videos, plenty of perks, plus instant up-to-date access to my Tesla stock price targets out over the next decade. So I'll see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.